to go through a little Q&A of some really common first home buyer questions that we get. So I'm going to be our first home buyer and Kirsty's going to be Kirsty, aka the first home buyer's best friend and mortgage broker. And we'll just get started.
Okay.
So Kirsty, I'm a first home buyer and I'm applying for a joint home loan with my partner, but they're not a first home buyer. Can we still get a grant?
Wow, it's really interesting. So anytime anyone has questions about this sort of thing, the first thing I do is I tell them that these are probably questions for state revenue or their solicitor. So probably just getting some legal advice. But let's say you and your partner were, let's say your partner was living in their house because they're not a first home buyer and you were living at home. So you're not technically de facto. Then by my understanding of the legislation, you can have a partner who you don't live with and you can still go out and buy a home separately and get the first home owner's grant. Where you'll run into difficulty is if you want to live together with someone. And I really think it's important for people to know that the government does audit these sorts of things.
Oh, yeah.
So I actually, when I was a young person, was involved in an audit process for one of these. I moved in with a partner who had claimed the first home owner's grant. I had also claimed it many years beforehand, and he got audited. We hadn't done anything wrong. It was well after the timeframes and all of that sort of stuff, but just know the government does audit it. I did also have a client get audited not too long ago because they moved into a property with their friend and their friend was paying rent but put the electricity on in their name. And so it looked as though the person who got the first homeowner's grant wasn't living there. So I would just say, when in doubt, contact state revenue, ask questions, speak to your conveyancer or your solicitor, and don't try and do the wrong thing because
you'll get caught.
You'll get audited and you don't want any penalties for that sort of thing.
Fantastic. Now, speaking of grants, what grants are out there that a first home buyer can access?
Okay, so we'll put a caveat on this because stuff lives on the internet for a long time. So we are recording this in November of 2022. And because Lucy and I are based in Tassie, we'll mostly talk about what's available in Tassie. But there is also a fantastic link on our website. If you search the word grants, you can find links to other state grants as well. But for most first home buyers in Tassie, if you're purchasing an established property up to how much?
$450,000 for outside of Hobart or $600,000 inside the Hobart postcode.
That's very good. There is a first home guarantee scheme and a regional home guarantee scheme. And the reason I look confused when I'm saying those two things,
just change the acronyms again.
Yeah, and they're basically the same in Tassie because Tassie's regional. So that's where effectively the government will go guarantor for you through a couple of different lenders. And what it means is you can be a first home buyer with as little as 5% plus costs, so sort of 7 or 8% deposit, and pay no lender's mortgage insurance. So it's actually an amazing scheme.
Gives you a lot of money.
So much money. So you can have lender's mortgage insurance savings of like $10,000, $11,000 on that scheme. It is only available through select lenders though. And the good thing is we've got access to lots of them. So there's that. Also, you can have 50% stamp duty in Tassie if you're purchasing a property under...
Yeah.
under a price under 600,000.
That's the full 600 for every rent, isn't it?
Exactly. Yeah. And if you're buying something new, so if you are building a new house, if you are purchasing a house and land package or something that a builder's done as like a speccey, or if you're buying a brand new unit or townhouse, you can have $30,000 as a first home buyer in Tassie. Now those grants are different state by state. Victoria's got some amazing stuff happening for first home buyers at the moment.
$0 stamp duty.
Yeah, super amazing. New South Wales had just put in place that instead of paying stamp duty as a lump sum, you can opt to pay it as an annual fee. Queensland has different grants for new properties, and we do home loans for people all over the country. So, when we figure out where you're buying, then we can research into that and look into that. But your very best friend when it comes to grants, as well as your conveyancer or your solicitor that's operating for you in that state.
Fantastic. So with those grants, could I claim multiple grants for being a first home buyer?
Get them all. No. I mean, sometimes. So say, for example, if you were in our hometown and you found a $400,000 unit in Mowbray that you wanted to buy that was an established property, you would get 50% stamp duty, and you could also get the regional home guarantee scheme, which is the same as the first home guarantee scheme, sort of, which would mean that you could put in just 5% plus costs, and then the government would effectively guarantee the rest of your home loan. So you can double dip in that that way. What you cannot double dip on is the property being under 600,000 and the new grants, one or the other for those. And then the sad thing is if you just buy land, no grants, it's not until you do the build that you can get access to something like that.
Cool. And I've heard about something called my home share scheme with the Tasmanian government. Can you write that for me?
I wish. Sometimes some brokers in the past have been able to write those home loans. So they used to be offered through one bank. They're now offered through Bank of Us. What I would recommend is look into the scheme and see if it's right for you. Where it can be significantly helpful is that effectively the government end up owning quite a large chunk of your home, which means your home loan's less. Yeah, about a quarter. Your home loan's less. You need less deposit to get into the home. Where I tend to get involved in those home loans is when people no longer want the government to own part of their home, or they want to move out of it and rent it out, and we need to finance the amount to get the government off. But the key thing to remember with that is it's both a helpful scheme from the government but also a clever scheme from the government, because if the property you bought for 400,000 and the government owned 25% of is then worth 500,000, the government's 25% has grown. So now you have to find, instead of 100,000 to pay them out, 125,000 to pay them out. So that's where it can be a little bit tricky. And there are some restrictions as to what you can and can't do with the property. So always when someone's looking at different options, I just think it's best to look into all the options, see what works for you, see what's best for you. A lot of the time, Lucy knows I love sending clients away. If I think another option that we don't offer is better for you, I'm going to be like, here, go and investigate this and do this, because it's about whatever works for you. But I also think anything that has pros probably has cons. And that's the same as every loan product, every bank, every broker, and every scheme like that. So look into the pros and cons and make sure that it's the right option and pick a path. So if you're going to do my home share, do that. If you're going to do, I'm going to find a property under 450,000 and do this scheme, great, do that. But don't have multiple applications in.
No, that can be bad for your credit history, right?
Exactly. We don't want to have, someone come to us and have applied at 7 different banks to see what can happen. I mean, that's kind of why you go to a broker as well. A broker won't apply at 7 different banks for you unless something goes very, very horribly wrong.
We'll talk to the 7 banks first.
Exactly. And we'll investigate the options. How many banks do we have access to?
We've got 32 on our panel at the moment.
32. And that's not including the other ones that we can get access to that I'm like, I don't need any more banks. Right now.
We're done. We're tapped out at 32.
Yeah, 32 with,
you can usually find something for everyone at that point.
Exactly. And we're not going to investigate 32 different products for you. If you're a first home buyer with this much deposit, I might look at 5 or 6 of them that I know are going to be really, really good for your situation. And then, if I had Lucy come in here who wanted to refinance their home loan, I might look at 5 or 6 different lenders here based on that situation, or someone might be wanting to buy an investment property. So you cherry pick the lenders that work for you. And then it's not just about interest rate either, is it? There are some banks that we I'm like stroking my head gently
to see what comes out.
Well, just in case, I end up pulling out my hair, because sometimes banks get very slow. Sometimes banks are not particularly helpful. So what we're doing when we're basing our recommendation on is not only interest rates, but also the upfront experience we're going to have with the bank putting you into the bank, and then the long-term experience, because we didn't just deal with the bank for, a couple of days to get your home loan set up. If I set a home loan up for you, I say to people all the time, you're stuck with me. I've got to negotiate with that bank the whole time you have them, keep the interest rate competitive, all that sort of stuff. So we want a good outcome at the beginning and right the way throughout for you, wherever possible.
Yeah, fantastic. So as a first home buyer, people are always telling me that I need to save up deposit. How much should I save?
All of it, all the money. No, that's being facetious, but obviously more is better. Whenever it comes to savings, more is better. But that doesn't mean that you can't make investigations when you're at the beginning of your journey from a savings perspective. There's 2 different things that I always like people to keep in mind. There's a minimum amount of savings that you should try and aim for. So if you're buying, say, in Tassie under 450,000, that sort of 7 to 8% mark is the minimum you would want to aim for.
So you've got to cover costs in there as well. It's not just about the purchase price of the property. I think that's something that first home buyers really don't know.
Exactly. Well, I just got off the phone with a client who's looking at refinancing with us at the moment, and the bank that they were dealing with didn't tell them about stamp duty. So when I'm talking about a figure like that, I'm talking an all-encompassing figure, because I don't want you to get to settlement date and then realize you're thousands of dollars short for your stamp duty. So I would say if you're looking at doing a purchase with no assistance, that's going to be your minimum amount. A really good rough figure though is 10%, because 10% gives you options. So say one of the lenders that we're looking at for the first home guarantee scheme doesn't suit you, 10% gives you options to look at other lenders. But then also you might buy something for $460,000 and then suddenly you're outside the scheme range, or the scheme might run out of places. So it's really good to have a backup option. There's a really, really good sort of figure though that means that you're in the sweet spot and you pay no lender's mortgage insurance with most banks for most properties, and that's 20% plus costs. So I feel like that's your gold standard for saving. If you want to have like a stretch figure, 20% plus cost is great. So there's that, the actual bulk amount that you need for savings. But let's say, for example, you were given $100,000 from a parent. Yay, that never happened to me, but wouldn't that be lovely? But then suddenly you've got your deposit. That's actually not enough for the banks though, is it?
No. How long do my savings need to be sitting in my bank account before the bank will count them?
It depends. So if you're renting through a property manager and we can show that you're paying consistent rent, then we can get around genuine savings relatively easy. Or if you have more than a 10% deposit plus cost, which is roughly 15%. But even if you had that amount sitting in the bank and you'd never saved $1 a day in your life, the bank's going to look at your bank statements and go, where's all the money going? Especially if you're living at home. You're living at home and you're not saving. The bank's going to wonder how on earth you can pay your home loan. So what we need to keep in mind then is that there's this funny thing called propensity. If you search our blog for the word propensity, you'll find a very comprehensive blog I've done on it. But what it means is you've got to show the bank that you have capacity to save. So what I always say a really good rough estimate is if you want to buy a $500,000 property, if you think, okay, my mortgage repayments are going to be about $600 a week, we'll use a rough figure there, then I need to show the bank I can afford a couple of $100 a week more than that in savings, because the bank is predicting future rate rises, which is protecting me as the buyer and it's protecting the bank. So making sure that you're showing that money consistently going into your bank account is great. And from your mortgage broker's perspective, it would be wonderful if those savings were sitting in a separate savings account and not in your day-to-day account, because that can get a bit murky sometimes, can't it?
It's exhausting. And so just with my bank accounts and things, I don't really have much of a credit history. Should I go and open a credit card?
Oh, it's like the worst advice that people get. I blame television for this advice.
And the word credit and people's aunts.
Oh, Auntie Betty, stop with the advice. We love you.
Betty.
Just make us some cookies and no more home loan advice, because it's not just Auntie Betty, it's Jim up the road and it's Bertha that's watched some American television. Now, the reason I say television is because that's really true in other countries. You need an established credit history. In Australia, we get home loans every day of the week for people that have no credit history whatsoever. What the banks really want to see is savings and job. Those are the two key things. Those are the things that we really like you to have. Sometimes actually, if someone takes that well-meaning advice from Auntie Betty, goes out and gets a car loan, I'm going to have no borrowing capacity. So please don't do that. And any debts that you do have, please make sure that they are immaculate as far as repayment history, especially things like Harvey Norman Go cards that statements go awry, Afterpay, Zip Pay. You don't want to have late payments on any of those sorts of things. And usually I will recommend that things like Afterpay and Zip Pay are closed down. Banks don't love them. And we all use them for the sorts of things that probably don't want to be spending money on if we're saving for anyway. So it helps in that process as well.
Damn, so my $10,000 credit card only has $20 that I've used on it. The bank's only got to look at that $20 though, right?
The bank is going to treat that like you and I have gone to Jamaica on a wild, crazy holiday, had the time of our lives and spent every cent of that $10,000. And they're going to base your projected repayments based on the limit on the $10,000. So as fun as Jamaica would be, we might need to look at that.
All right, I'll close the credit card. What about my HEX debt? Does that count as a debt in the eyes of a bank?
It does, but it's usually one of those things that it counts, and the HEX thresholds have been lowered at the moment. But it's not really something that I want you to be putting extra money into. And in fact, that kind of counts for all debt. So before you go crazy, close credit cards, pay down debt, anything like that, talk to a broker first, because something like a HEX debt, let's say you went through a lot of uni. I think you maybe did go through a lot of uni.
I did go through
Let's say you've got a $70,000 HEX debt. You have if your salary is the same, exactly the repayment that I would have if I had a HECS debt of 7,000 if our salaries are the same. So if you take your $70,000 HECS debt and pay 20 grand off it, you're not lowering the payments. It makes no difference. So a debt kind of impacts like that with a car loan, those sorts of things. It impacts if it exists. So before you make any changes to debt, that's where it's really good to put a bit of a debt plan in place with the broker beforehand. But HECS debt, just make sure your broker knows about it. That's the key thing.
Making sure the broker knows about things. So I'm self-employed and my accountant is really good at making it look like I don't earn a lot of money so that my taxes are great. That's good, right?
Well, it's great from a tax perspective. And it's funny because we love accountants here. We work with lots of them, and the best accountants in town make it the hardest possible thing for us to do our job. It's really a great accountant's job, is to make you look as weak on paper as possible, legally and within the law, so that you pay as little tax as possible.
Yeah.
We want you looking as strong on paper as possible. So sometimes there is that, I guess, conflict between everybody doing their best job to look after you. It doesn't mean that your accountant's doing a bad job. They're doing exactly what you've paid them for. But sometimes it's really, really good to talk to your accountant before you want to look at doing borrowings, and just let them know that that's what you've got coming up in the future. And I do the same for me. When I'm looking at a future investment, I'm having that conversation with my accountant up front so that they understand that with my preparation of my tax returns. Because I mean, accounting, much like mortgage broking, this makes me sound like such a crazy person, but it's an art form. So you could go and you can meet with 4 mortgage brokers and get 4 different options. Same with accountants. It's not a black or white situation. There is not a one size fits all solution. So having those conversations with your accountant and making sure they know your future plans can be so, so helpful.
Cool. So I thought about making an offer on a house the other day, and my friend asked me if I was pre-approved, but I don't know what that means.
It means different things to different people. So sometimes people will do a bit of Googling late at night and put their information into a calculator and go, I can afford it. I'm pre-approved. And that's really not pre-approved. I remember when I used to be a real estate agent, those were the scariest people, because they really did think that they were pre-approved because they'd had a bit of a look online. So number one, that's not a pre-approval. A pre-approval is when you've sat down with a broker or with a bank and an application has been put to the bank, and the bank's had a look at it and said, yep, in principle, we're pretty happy we've asked you whatever stupid questions we've got. And banks always have
so many
fun questions. I didn't mean stupid. I meant legitimate and authentic and detailed and
detail-oriented,
nuanced, and yes, so fun questions. But the bank's asked you whatever questions they want, and they've said, in principle, we're happy to lend you this amount of money. It's not an ironclad guarantee. Ironclad. Yeah. It's not a guarantee though, because what does the bank still need to do before they're going to give you the money?
They need to check all of your income documents again, and they need to value the property to make sure that they actually are happy to lend money against that security. So plus, please, rate rises will affect it.
Exactly. Please still have a job.
Yeah, please don't change employment halfway. Hang on. I'd like to change my job halfway through putting in documents to the bank.
Please don't. And I have had people who've been pre-approved or who we've run borrowing capacity for, who then resigned from jobs and still thought their borrowing capacity was the same. It's a snapshot in time, and that's my alarm. So let's turn that one off. That's saying that my word, we've run long in our conversation. It's too much fun. But ultimately, it's not a guarantee. It's an indication that everything should be all right. The beauty of having a pre-approval, especially with brokers like Carrie, Tam, myself, who know most of the real estate agents in town, is we can give them a call and we can say, Lucy's pre-approved, they're good to go, ready to, buy, and we're with a quick lender. That's always a nice thing to be able to say to a real estate agent as well, because there certainly have been times where some lenders are not quick. And you imagine for a real estate agent to recommend to an owner of a property that they should accept your offer, they're basically saying, take it off the market. Take it off the market for these people. I think they're good. Yeah. So pre-approval is something formal, and you should get a letter from the bank that says that you're pre-approved. So your broker can send that on to you, or if you're dealing directly with a bank, the bank should give you something in writing. What you don't want to do is you don't want to give that to the real estate agent though.
No, don't let them know the ceiling, especially if you're offering underneath it, because they've got a job that gets them to push it up a little bit.
Exactly. So the real estate agent, and love them. I'm going out for dinner with 2 of them tonight. Lots of the agents are really, really good mates, but they don't work for you as the buyer. They work for the seller. So that's their job. Their job is to get as much money out of you as possible. So keep your pre-approval. When this talks about a ceiling, what we're saying there is that's your maximum purchase price. That's your information. You keep that to yourself, and you keep an understanding of who's working for you. So the real estate agent works for the seller, mortgage broker works for you, and your solicitor or conveyancer works for you. So that's why it's really important to have them proof any contract before you sign it, just to make sure that you're protected. Most of the advice that we give out is to help you get your home loan approved and to protect you. It's like I'm mothering everyone. It's disturbing. A lot of children out there, especially the first home buyers, because this is the first time you will ever do this. It's
But there are a lot of people it might be the last time you ever do it too, because you might hit the sweet spot straight away.
But not everybody should look for a forever home first up, because that can lead to disappointment.
That's true. All right. Well, speaking of pre-approvals and quick lenders, how long is this going to take?
Forever.
Like, I would like to have my pre-approval and buy a property in a week. That's a reasonable time frame, yeah?
Well, why don't you tell me that? Like, of the lenders that we work with for pre-approvals, how many would that be a reasonable time frame for, do you think?
Probably 2.
Yeah. So 2 out of 32. So that's going to tell you that it's probably not a reasonable time frame for most lenders. What I would say is the quicker you get information back to us, the quicker the process runs. Because what happens is, if I'm a bank assessor and I'm looking at 20 files, I'll get yours when it finally gets to the top of my pile, and I will ask whatever questions. And then the quicker we can get those answers back, the quicker it pops back up to the top of my pile. If it takes me a week to get the answers back, well, of course, it's going to be a really slow process. How do we typically ask for people for extra information we need during the process?
We are going to send you an email. We're probably going to send you 3 emails. Please respond to the emails. We'll often dot point exactly what we need from you, and that's not us asking for extra documents because we think it's fun. A lot of the times the bank wants information, even if we've already provided it in a really, really specific format. So that's what we're communicating to you throughout that process.
Yeah. And also sometimes, like, we ask for things and it's not just for fun. Like, if we ask for your driver's license on a white piece of paper, if you do it on carpet,
you can't read the numbers and the bank's going to send it back to us. And the same for if you've got too much light glaring on things, or if paper's crumpled. Banks are so specific about needing to be able to see every single pixel that it is really important that information is sent back to us as clearly as possible. Yeah. Whether that's when we get you to sign stat decks, whether we get you to take a photo of ID, even just scanning back a piece of paper to us rather than taking a photo on your phone can make such a difference with an application.
Yeah. And if you can send back everything we ask for in the one email, that makes life so much easier.
Excellent. Well, I think that's all of my first home buyer questions at the moment.
All right, I'm going to ask you one, and I don't even know what you're going to answer to this,
but should be interesting. I wasn't prepared.
When you bought your first home,
oh God, it was horrible. I could have gone through a broker and I didn't, and I regret that consistently.
What do you think would have been different had you gone through a broker like us or like someone else who was great at their job?
So my first home loan experience was really stressful. So I went directly through my bank. I'd been with them for a million years and I thought that I was going to get a good deal, walk in, easy peasy. I made the mistake of putting in an offer on a property before being pre-approved because I'd been given a general figure from the bank when I chatted with them. I didn't have anything in writing, so it took me a little bit longer. And then because rates changed while I was going through my approval, all of a sudden I was $5,000 short. And so at the very last second, my dad stepped in to guarantee my loan so that I wouldn't have to have LMI. But I suddenly started picking up extra hours at work. I stressed myself out. And I didn't get an interest rate either, which was, not great for a first home buyer. So it was a really stressful process, low communication. The person at the bank who was handling my file resigned and went to a different branch, like halfway through my application process. It was just stressful and I felt really pressured. I also felt pressured from the real estate agent because I didn't know that I could stand up to them. When I got my house, it was filthy. It took my dad, my friends and I 3 days to clean the place before I felt comfortable to move in. But now if I had a broker and I went to the broker and said, oh my God, I'm not comfortable with this, Kirsty would turn to me and go, no, go to your solicitor. Oh my God, have them contact the agent right now and tell them that you're not happy. You don't have to do that. And there would be more people standing in my corner going, it's okay. You don't need to panic and you can stand up for yourself and we'll stand up for you too. And I think that would have made it a much easier experience from the jump.
And I mean, 2020 hindsight, I didn't purchase my first home through a broker either. In fact, I walked directly into my bank and they declined me. This is weird because I had no idea. Like, they just were like, no, you don't really meet our criteria. So then I walked up the road to another bank and they did give me a home loan. But imagine if that bank had declined me as well. I'd just kept walking the street.
Which is essentially what we were going to do for you.
So, and this was, of course, back in the dawn of time because I'm, senior in years now. But had I had a broker, that's what a broker does. A broker looks at the bank's different policies and says, no, you don't quite meet that one. You need to go here. But we both sort of, we happened along in our own way and we got there in the end. But
stumbled into it hardcore.
Yeah, it would have been a very different experience.
But this is why I bully all of my friends now when they've started to buy homes. So all of my friends now getting to the age where they're getting to their kind of first home bracket. I'm like, don't do it alone. Please don't do it alone. My God, I don't care if you come to us, but go to any broker, please.
Yeah, and that's a good thing. I mean, like, obviously, I would love to help out everyone that wants to come to us, but there are lots of other amazing brokers out there, great people in the banking system as well.
For sure.
We're all here to help, and what you want to do is you want to go somewhere that you can ask lots of questions. You can be made to feel like your questions are really reasonable. For us, I'm really lucky to be supported by an amazing team. I have people like Lucy. Lucy's training to be a broker in their own right later on down the track, which is amazing. And as you can see, Lucy's going to make one heck of a broker. But basically, you want to ask lots of questions. You want to make sure that you feel comfortable with whatever you do. We've got lots of resources for first home buyers. If you need more of them, reach out to us, but also our blog's jam-packed with them. And we have a first home buyer mailing list that we can pop people on, which spits out tips every week to you during the process.
And that's also not just stuff about the process of being a first home buyer, but it's about how to look at the market, how to make an offer, how to help your offer stand out. Just really good things when you're starting to look and you're not really sure about the process, because there's heaps going on. It's a massive process.
So thank you for listening and watching. And again, just reach out if you have any questions or queries.